Good morning, guys. Good morning. Welcome to the session of Pgbp. Good morning. And yes, we are live now. So if you can hear me and you can see me, just type a yes in the chat box. If you can see me properly, if you can hear me properly, just type a yes in the chat box. Can you hear me? Good morning, Ravi. Good morning, Yash. Good morning, Yashika. Om Kakati. Deeptesh Das. Palak Khedia. Karthi. Vivek Sharma, Ravi Gupta, Jyotish, Pawan, Deepika, Vishnu Prasad. Good morning, guys. And yes, welcome to this session of the Pgbp. And yes, guys, I was not able to take the last lecture because my throat was not well. Today also it's not perfect, but yes, it's in a speakable condition, so I'm able to speak properly. Last class I could not take this Tuesday, but yes, today we are going to continue our discussion on Pgbp, which we had left in the earlier lecture. Yes, Pgbp, one of the most important topics of your syllabus, one of the most important chapters of your syllabus, and not only for CMA intermediate, it's equally relevant for CMA final as well. One test of Pgbp has already happened last week. Next test is scheduled in the coming weeks. And yes, after giving test in two parts, I will be taking a test of entire Pgbp once together. Okay. So just be prepared for more than one test for Pgbp. Pgbp test will not happen only one time, it will happen multiple times because Pgbp is a huge chapter. So I'll first take the test of Pgbp in parts, small parts, and then I will take a consolidated chapter of the consolidated test of the entire chapter together, which will be scheduled in the coming weeks. So I'll be giving you the information on the WhatsApp group. I hope you already are part of the WhatsApp group. All right, guys, so in the last lecture we had studied our section 35 AD, which was on capital expenditure for specified businesses. Now we have started the special deductions, guys. What are special deductions? Special deductions means deductions which are given apart from the usual norms, apart from the usual accounting norms. The accounting norms are that only revenue expenditure deserves a full set off or full deduction in the year in which they are incurred. Only the revenue expenditure are eligible for a full deduction. But guys, in this case, in certain cases, even the capital expenditure will be allowed as a deduction, complete deduction in year one. These are known as special deductions, and special deductions are what we are going to discuss in these lectures. And yes, in the last session, guys, we had studied about various special deductions. Like one of the special deductions was the deduction on capital expenditure for specified businesses. Then we had studied a deduction on scientific research expenditure. All these deductions are special deductions. Why? Even the capital expenditure is allowed as a deduction in year one. In the very first year, the capital expenditure is also allowed as a deduction, and that is why these are known as special deductions. And last class, we had completed this 35 AD deduction. All right. Now, in this particular class, we are going to start the next special deduction, amortization of the telecom license fees. Now, first of all, please understand this expenditure called the telecom license fees. So, guys, the telecom operators who operate telecom business, the telephony business, like Vodafone, Bharti Airtel, Idea, Geo, all these telephone operators, telephony services operators, these are required to get a special license from TRAI to operate in a particular region. TRAI is the Telecom Regulatory Authority of India. They have to take some permission, they have to pay some fees, which is known as the telecom license fees. They have to take licenses, pay the fees, and then only can they provide telephony services in a particular area. After getting regulated, after getting due recognition and license from the respective authorities, they are permitted to continue their business in that particular area. So it is a highly regulated business. It's not that anyone and everyone can start his telecom business. It is a highly regulated business in India, and this business requires a license fee to be paid. Now, naturally, guys, license fee is a huge amount which is paid at the starting, and it remains valid for a couple of years. For a few years, it remains valid. So this particular license fee is required to be deducted from the Pgbp, profits and gains of in business and profession. It is required to be deducted from Pgbp, and that deduction is regulated by section 35A BB. So the conditions are that expenditure is incurred and paid. So telecom license fee deduction is only eligible if it is paid. So it is not only when it is incurred, but when it is paid, it is allowed as a reduction. So if you have telecom license fee which is not paid, then it is not allowed as a deduction. Payment is a necessary factor to allow this as a deduction. Allowed in equal installments over a period of license. So whatever is the period of license, which means the license say is valid till 10 years or license is valid till 20 years, then over the period of license, you will amortize this fees equally, just like straight line method, just like normal amortization which we do of intangible assets. So the amount is allowed, the license fees is allowed over the a period of license in equal installments. I'll give you an example. Suppose if 50 lakh worth of license fees is paid, 50 lakh worth of license fees is paid, and the tenure of license is say 10 years. Okay, so 5 lakh per year will be allowed as a deduction. This is the principle which is stated over here. Then subsequently it says, sometimes what happens is fees is paid before commencement of business. So even when the business has not commenced, even before the business has commenced, the fees is required to be paid. So when the businessman is in the process of establishing its business, at that point in time, it has to pay fees in advance to the regulatory authority. And at that point in time, business is not up and running, so there's no income. When there's no income, there's no question of deduction. Okay, so before commencement of business, if the fees is paid, then the deduction starts from the year when the business commences. So year when the business commences, the deduction will start. So deduction starts from commencement of the year. So say you have paid your license fee in 2022, but your business starts from 2024. So from 2022, say for 5 years, your license fee is granted. Let me take this example in writing. Okay, so suppose you had paid the license fee of 5 lakh rupees in 2022. Okay, you have paid the license fee in 2022 of 5 lakh rupees. This license fee is valid for 5 years. Okay, this license fees is valid for 5 years. Now you commenced your business in 2024. You commenced your business in 2024, and let's presume the dates to be 1st January of each of the year. Okay, 1st January of each of the year. So you commence your business on 1st January 2024. You had obtained the license on 1st January 2022. You had paid 5 lakh rupees, which should have been amortized over a period of 5 years, right? But unfortunately, due to some reasons, your business commenced from 2024. Now, in the chat box, I want to know. Your hands in the chat box. After 2024, for how many years will the amortization take place? After 2024, for how many years will the amortization take place? The useful life of the licenses, the tenure of the license is 5 years. So after commencement of business, because it says that after commencement, deduction to start from commencement. Okay, so deduction will start from commencement, but for how many years will the deduction be there? That is the question. All right, Adarsh says 3 years, Nandini says 3 years, Yashika says 5 years, Zainab says 3 years, Jyotish says 3 years, Deepika says 3 years, Nandini says 3 years, Om, Deeptesh 5 years. Most of you are right. The deduction will continue for 3 years. Because guys, the license is valid for a period of 5 years, and 5 years will start from 2022 and they will end in 2026. So 31st December 2026, this license is going to expire. This license is going to expire in 31st December 2026, right? So the license has to be amortized in 2024, 2025 and 2026. So 3 years will be allowed to amortize this particular license. So 5 lakh rupees divided by 3 is the per year deduction which will be allowed to be claimed. The deduction cannot exceed beyond the expiry date of the license. Expiry date is 31st December 2026. The amortization cannot exceed the expiry, the expiry of the license date. Amortization cannot exceed beyond this particular date. That is the principle, and therefore the deduction starts from commencement of the business. Fee paid after commencement of the business, deduction starts from the payment year itself. Whenever the amount is paid to the regulatory authority, from that year, guys, the deduction starts. Okay, so there's no difficulty in the second part. Okay, sir, got it. Let's move on to our next deduction, and the next deduction is, yes, one of the very important discussions, one of the very important deductions of your syllabus, guys. Section 35D, preliminary expenses. One of the very important deductions of your syllabus, one of the very important topics of your syllabus, Pgbp, amortization of preliminary expenses. One of the very important topics of your syllabus. From an exam standpoint also, it's very important. It can also come as an independent question, guys. It can also be clubbed with an entire full-fledged Pgbp question. It can also come as an independent question. Anything can happen with this particular section. So amortization of preliminary expenses. Preliminary expenses is section 35D. All right. Now, what do you mean by preliminary expenses? First, we need to understand this. Only then would we be able to appreciate why a special deduction for it. Sir, why can't it just be treated as business expense and allowed under section 37? Why are we doing a special section for it? So what is the need of discussing it separately? Why its nature is so special that we need to discuss it separately? So before answering all those questions, we need to understand what do you mean by preliminary expenses. First of all, I'll make you understand the word preliminary. Okay, preliminary. The meaning of the word preliminary is preparatory. So while we are preparing for something, the expenditure which we incur while we are preparing for something, that is known as preliminary expenditure. When we are preparing for something, if we are incurring some expenditure on preparation of something, that is known as preliminary expenditure. Guys, when we are establishing our organization, when we are establishing our company, when we are establishing our business, there are certain expenses which are incurred even before the business is established. And that is known as preliminary or preparatory business. It is known as preparatory business. The business which we are preparing, that business is known as preparatory expenses or preliminary expenses, section 35D. Now, why a separate section for it? Why are we studying a separate provision for it? Because the expenditure has been incurred before the business has started. So actually, business is not started as yet, and the expenditure is incurred before the business is started. And why have we incurred such an expenditure? Because business starting of formalities are required to be done. But the moot point of consideration is, guys, this expenditure is not relevant for running the business. This is not relevant for running the business. It is relevant only and only for starting the business. That is the moot point of difference between any other expenditure and this expenditure. So this expenditure is not incurred for running of the business. It is incurred for starting of the business. So Income Tax Act can say that this particular expenditure is not deductible at all. Why? Because it is not incurred for running the business. You have not continued your business, or you have not carried on your business using this particular expenditure. This expenditure has been incurred before setting up the business. What if the business is not set up? Then also this expenditure is a sunk cost, is a lost cost. Plus the matching concept. What do you mean by matching concept? Revenues and expenses are to be matched with each other. Only when revenues are occurred, then the expenses are allowed to be deducted. That is the matching concept which we always study in our accountancy, and that impacts our books of accounts. So from both of these angles, this expenditure find a little it is found a little out of place, because it is not incurred for running the business, and plus it doesn't even contribute to earning revenue directly. We cannot say that this expenditure has helped us in earning revenue, because there might be a situation where companies incorporate and there is no revenue at all. There are those situations as well. So a special provision was drafted to allow preliminary expenses in the books of accounts as per the Income Tax Act, and therefore these particular expenses are specially dealt with under Section 35D. So, first of all, let's discuss what do you mean by preliminary expenses. So, guys, preliminary expenses means preparation of reports. So, before you commence your business, you prepare certain reports to ascertain whether the business will be profitable or not. So for preparation of these reports, there are certain professionals which are hired, and there are charges which are to be paid to those professionals. That is known as preparation of reports. What kind of reports are there? Project reports are there, and feasibility reports are there. Feasibility means what? Feasibility means validity. Feasibility means whether the business will be a success or not. This is known as feasibility report. And project report means the project which is being carried on, the project which is being continued, that particular project is valid or not, that particular project will go through or not. So all these things are written in the project report. So project report and feasibility report, these are two kinds of reports which are there in this particular expenditure, preliminary expenditure, and both these expenses are incurred before the business is commenced. Okay, before the business starts, both these expenses are incurred. Now, conducting market survey, this is the second kind of expenditure which is incurred, whether market is ready to take your product or not, whether that product will be successful in market or not. That is the second question which we need to ask, and that is responded by certain questionnaires which are filled by the customers, and surveys happens within the market, across the market. Therefore, the second kind of preliminary expenses is conducting market survey. Third is legal drafting charges. Whatever documents are required to incorporate a particular company, whatever agreements are required to be drafted at an initial stage, so like agreement between you and the supplier, the prospective supplier, the company and the prospective customer, the company and the shareholders, then the company and the stakeholders, like the banks which are giving loans to the company. So all these legal things are required to be drafted. MOA and AOA are also required to be drafted. Those MOAs and AOAs are also a relevant part. So all these drafting happens before the business commences. So this again forms part of preliminary expenses for agreements relating to setup of business, or for MOA, AOA, etc. The legal drafting happens. So this is one of the preliminary expenditure. The next one is the company's registration fees. So whatever is the company's registration fees, which is paid to ROC, Registrar of Companies, again that particular fees is a preliminary expense because business has not started as yet. And this fees is paid before the business commences because the company is incorporated, and for incorporation we need to pay the registration fees. Then expenses for public issue of shares or debentures. Whatever public issue is there, whatever shares and debentures are listed in market, whatever shares and debentures are raised. So whether they're listed in market or not, whether they're listed or unlisted, okay, there is a proper procedure which is required to be followed by the companies to raise capital. So that particular procedure will entail certain expenses like underwriting commission. UW commission means underwriting commission. Brokerage, which is paid to the brokers. Then drafting, printing of prospectus. There's a concept called shelf prospectus also. So all those things which are required to be done before the company is incorporated, all those things will form part of these expenses, which is preliminary expenses. Now, guys, the more point of consideration over here is that these expenses are quite large. These are not small expenses. The professionals who draft these agreements take a lot of money. The professionals who provide you raising of funds, services, they take a lot of money. So these preliminary expenses are not small expenses. They are actually huge expenses. Therefore, the question is whether should they be allowed as a deduction in year one itself when you commence the business, or should it be spread over a period of time? That is the question which we need to answer in this particular section. But before we come on to that, let's understand the meaning of the word amortization. What do you mean by amortization? Okay. So amortization means to write off or to set off. That is the meaning of the word amortization. To write off or to set off. And how do you write off this particular expenditure called the preliminary expenditure? How do you write it off? 5 equal installments after commencement subject to the following limit. So we will not write off this preliminary expenses in year one of commencement. We will write off this preliminary expenses in 5 years. of commencement. Okay, so I'll give you an example. Okay, let's take an example. Okay, so your business starts on 1st of January 2023. Your business starts from this particular date. Before this period, there are certain preliminary expenses which have been incurred. Say they are to the tune of 5 lakh rupees. Your business commences from 1st January 2023. Please tell me for how many years? Till how many years? Till what last date should I amortize this preliminary expenses? Till what date should I amortize the preliminary expenses? Please write in the comment box. Till how many years should I amortize these expenses? What is the last date till when I should amortize the expenses? Yes, Jyotish, it is applicable to corporate assessee only. Till how many years? Till which year should the amortization takes place? Okay, so it will take place till 31st December, 31st December, 31st December. Most of you are confusing yourself. Most of you are confusing yourself. Jyotish, rethink. Jyotish, rethink. Most of you are getting confused. Yes, Pankaj has amended his answer. Pankaj had given the wrong answer earlier. Pankaj has now amended his answer. Now is the correct answer. Jyotish Raj, correct. Correct. Now you have corrected the answer. So it is 2027. So from 2023 till 2027, 31st December 2027, you will write off this entire amount, right? 1 lakh rupees for each year. 1 lakh rupees for each year. For 5 years, you will write off this amount. 1 lakh rupees per year, you will write off this amount till 31st December 2027. Absolutely correct. Absolutely correct. Okay. Then 5 equal installments after commencement, subject to the following limits. What are the limits? There are certain limits for incurring preliminary expenses. You cannot incur unlimited preliminary expenses. The limits are the limits are for non-corporate resident, a resident which is a non-corporate entity, a resident which is a non-corporate entity. For them, the limit is 5% of the cost of project. For non-corporate resident, for a person who is not a corporate, which is not a company, which is apart from company, 5% of the cost of project. For an Indian company, 5% of cost of project or capital employed, whichever is higher. These are the two limits subject to which your the preliminary expenses should be incurred. Okay, if you incur preliminary expenses above these limits, then they will not be allowed. They will not be allowed as a deduction. So for non-corporate resident, the limit is 5% of the cost of project. For an Indian company, the limit is 5% of cost of project or capital employed, whichever is higher. This is the limit which you need to take into consideration. Now, sir, what do you mean by cost of project and capital employed? Guys, the definition of cost of project and capital employed is what is cost of project? Cost of project is actual cost of fixed assets on the last day of the year of commencement. When the business is commenced, when the business has started, last day of the commencement, last day of the year of commencement, whatever is the actual cost of fixed assets, that is the cost of the project. And what is capital employed? Capital employed is share capital, debenture, long-term borrowing on the last day of the commencement year. So whichever year the business has commenced, last date of the commencement year, the business will start, will calculate the capital employed as well as the cost of project. Both will be calculated at the last day of the commencement year. So this is how the preliminary expenses will be computed. Yes, this section is not applicable on foreign companies. On foreign companies, this section is not applicable. It is only applicable to resident who's either an Indian company or a non-corporate assessee. Yes, guys. So these are the limits subject to which section 35D will be allowed as a deduction. Okay, sir. Got it. Now we move on to our next discussion, discussion on our expenditure of interest on borrowings. Interest on borrowings. Now, guys, every businessman requires capital. Every businessman borrows some loan to enable smooth running of his business. Loans are taken and interest is paid to banks so that the business can meet its long-term and short-term funds requirement. That is the objective of loan. So what will happen to interest on loan? Whatever interest is paid on borrowed capital, it will be allowed as a reduction under section 36(1)(3). That is the section under which interest on borrowed capital is allowed to be allowed. So interest on borrowed capital used for carrying on business or profession. Interest on borrowed capital used for purchasing capital asset. Now I've divided interest on loan, the borrowing, for two purposes. Two purposes are purpose of carrying on business or profession, which means that you have taken loan for purchasing inventory, for repaying your creditors. Short term loan is there, or sometimes we take bank overdraft, we take CC limits, cash credit. All those are the interest borrowed on capital used for carrying on business and profession. So if you are doing revenue expenses from your or working capital expenses from your borrowings and loans, then they will be allowed as a deduction in its entirety in the year of incurrence itself. Okay. But if you are using the loan for building your assets, you're developing plant and machinery using that particular loan. Okay. You're developing some fixed assets which are useful to you for a longer period of time using that borrowed capital, then the interest is treated as capital expense. It will be added to the cost of the machinery. It will be added to the cost of the asset. So how will we add it to cost of asset? Let's see. So the rule is interest for period up to commencement of business or put to use of asset. So interest up to the commencement of business, interest which you have paid for the loan, which you have borrowed for building your capital, building your plant and machinery, building your buildings. Okay. Interest which is paid for those borrowings which are incurred for building your business, but up to commencement of business, or put to use of the asset. So assets have not been put to use. So business has not commenced. Asset has not been put to use. Before the assets were put to use or before the business has commenced, you have incurred interest expenditure. What will happen to that interest? Added to actual cost of the asset. Whatever asset is being made using that loan for which interest is paid, you please add the interest to the actual cost of that particular asset. You will add the interest. You will add the interest to the interest cost to the actual cost of asset and claim depreciation over it. So that interest also becomes capital in nature. That interest expense will become capital in nature. But if the interest is paid for a period from put to use, if put to use onwards, you have paid the interest, which means you have paid the interest when your business has started operations and your machinery is also put to use, still your loan is not repaid and you're paying interest on that particular loan, then guys, the interest will be allowed as a deduction. The interest will be allowed as a deduction to you. That is how the interest is bifurcated. If paid before commencement of business or before the assets were put to use, if in that situation interest is paid, then it is added to actual cost of asset. But if the interest is paid beyond the period of put to use of asset, when put to use is not happened and after put to use the the asset has been incurred, or the after put to use the interest has been incurred, then it is allowed as a deduction under Pgbp. Normally, the way we allow any other deduction, it is allowed as a deduction under section 36(1)(3) as Pgbp. Okay. So these are the two norms which are used to compute the deduction of interest. Then interest on discount on zero coupon bonds. Now this is a very, very important discussion, guys, and a very easy one. Okay, straightforward one. The discount which is given on zero coupon bonds. Now, first of all, please understand what do you mean by zero coupon bonds. Before that, I would like you to know what is bonds. Anyone, please tell me what is bond. What do you mean by bond? Please tell me what do you mean by bond in the chat box. What kind of an instrument is a bond? Please write in the chat box. What kind of instrument is a bond? Please write in the chat box. What is a bond? Very good, Ravi. Very good. Very good, Vanshi. Very good, Vanshi. Anyone else? What do you mean by a bond? What do you mean by a bond? Debenture is the right answer. Loan is the right answer. So yes, guys, you are right. Bond means you are taking some loan from someone. It is an instrument of taking loan that is known as bond. Okay. So suppose if you have taken a bond on 1st of January 2022 and that bond is repayable on 31st of December 2025. You have taken the bond on 1st of January 2022. The bond is repayable on 31st December 2025. The face value of bond is 100 rupees and you are eligible for interest during the tenure of the bond at the rate of say 8%. So 8% you're going to get in first year, 8% you're going to get in second year, 8% you're going to get in third year, 8% you're going to get in fourth year, so on and so forth. On 22, 23, 24, 25, there are 4 years. You'll get 8% interest during this 4 years, either in a cumulative manner or per year on an annual basis. Okay. Now, these bonds are usually risk free. There's no risk attached to these bonds. And bonds means your money, 100 rupees, will be returned back to you. They will be returned back to you at the end of the maturity period. So rupees 100 you will get back on 31st December 2025, and you will get interest at the rate of 8%, which is 8 rupees, 8 rupees, 8 rupees, 8 rupees during the tenure. During this entire tenure, you will get 8 rupees per year as interest amount. That is how bonds are structured. But the special thing about the zero coupon bonds is that there is no interest element on it. There is no interest element on it. There is no interest on zero coupon bonds. So the interest is 0, 0, 0, 0. Interest is 0 on zero coupon bonds. Yes. Adarsh is very right. Vivek is also good. Nice. So zero coupon bonds means there is no interest which is given to the investor in zero coupon bonds. Sir, if interest is not given to the investor, what is the benefit which the investor is deriving? Sir, he is getting 100 rupees at the end of the period, which was his initial investment. So what is the benefit which is accrues to this particular investor? Please write in the comment box. If you know what is the benefit in zero coupon bonds, please write in the comment box. What is the benefit which accrues to a person who's taking the zero coupon bonds? What is the benefit of a person who's investing into zero coupon bonds? There is no interest per annum which is given. Maturity value is also same as face value 100. There's nothing extra which is received. Then what is the benefit in zero coupon bonds? What is the benefit of investment in zero coupon bonds? Rather, you shouldn't invest in such bonds. You should keep your money with you safely or invest it in your fixed deposit. That will at least give you a return of 6% or 5% or whatever it is. What is the benefit? Yes, Pankaj, interest is 0. So would you like to invest in these bonds if the interest is 0? What is the benefit to the investor? Pankaj, I am asking what is the benefit to the investor? What is the benefit to the person who's purchasing these bonds? I'm not asking the benefit to the company. Perfect. Vanshi is saying no risk, but Vanshi, there's no return also, no? What is the benefit? Nandini says no. Yogesh, right answer, very good. Yes, return guaranteed. Are Pankaj, there is no return. How is return guaranteed? There is no return. You are earning 0 interest. And whatever you have invested, you are getting that back. What is the return? There is no return. So guys, the benefit of zero coupon bonds is that it is issued at a discount. So if the face value of a zero coupon bond is 100, then it will not be given to you at 100 rupees. It will be issued to you at a discount. So maybe it will be issued at a discount of rupees 30. If it is issued at a discount of rupees 30, then you will have to pay 70 rupees for this particular bond. For purchasing this share, for purchasing this bond, you have to pay 70 rupees. So an initial investment of 70 rupees will reap you a benefit of 30 rupees and you will get 100 rupees back at the end of the maturity period. This 30 rupees is nothing but the accumulated interest which is imbibed in the discount. It is nothing but the accumulated interest which is imbibed in the discount. So there is a return in zero coupon bond as well, but it is a return in a different way. What is that different way? Different way is that it is issued on a discount. It is issued at a discount and par value. It is redeemed at par value. It is issued at a discount and it is redeemed at par value. So the difference between the issue price and the redemption price is actually the benefit which accrues to the investor, which is known as discount on issue of debentures or zero coupon bonds. Now, this discount is to be amortized over the period of the bond because this discount is an expense for the company. This discount is an expense for the company. So just like company would have paid the interest, company is paying this discount. This discount is the expense for the company, and this discount is to be amortized over the period of the bond. So whatever is the period of the bond, over that period, this particular amount should be written off. I'll give you an example. 1st January 2022, I'm issuing a bond of face value of 1000 at an issue price of face value is 1000. Its issue price is 750. The bond is redeemable. The bond is redeemable in 2026. Okay. This is the redemption date. This is the redemption date and it is a zero coupon bond. Now my question is, what is the amount of amortization? Question number 1, what is the amount of amortization? Per year, per annum, amount of amortization per annum. Every year, how much amount should be amortized, should be hit as expense for the company? What is the amount of amortization? Why company issues zero coupon bonds? Vivek, company issues zero coupon bonds so that it doesn't have to pay interest in an annual manner. And, these bonds will enable the company to, reduce the burden of paying interest every year. They will pay interest once and for all at the maturity time. They'll pay entire 100 rupees to the investors, and they will initially, give those instruments or bonds at a discounted value. That is the procedural benefit which will be there. Per annum interest, per annum discount which is allowed as a deduction, that is what we need to compute. Okay, sir. Please tell me the amount of per annum deduction. Amount of per annum deduction. Amount of per annum deduction. What is the amount which is allowed as a deduction per year? Very good, very good, very nice. Rohit Chaudhary has written his answer 10-20 times. It's okay, Rohit Chaudhary, I've seen your answer. That's okay. Okay. Yes, guys, you're right. The amount of amortization per year is 50 rupees. How did you compute it? How did you compute it? We computed it by subtracting the issue price from the redemption price. So 1000 minus 750. We subtracted the issue price from the redemption price. So 1000 minus 750 divided by the number of years of life of this bond. Life of the bond is 22, 23, 24, 25, and 26. 5 years is the life of this bond. So the amortization per year is computed as rupees 50 per year for the company. Perfect, guys. Correct answer. So yes, this was a small concept of zero coupon bonds. It's an important deduction. Okay, sir. Now we come on to the BAP of all deductions, and a very, very tricky deduction, which is bad debts. very, very tricky deduction, which is bad debts. Not an easy one, but a tricky one. Okay, bad debts. One of the most important, one of the most confusing deductions of your Pgbp section. It's very easy. Let me tell you, it's very easy. You just need to understand the logic behind the deduction, and it's very, very easy. Okay, so let's start the deduction of bad debts. The deduction on bad debts, section 36(1)(7) is the relevant section where bad debts are discussed. Okay, so bad debts, section 36(1)(7). First of all, I would like you to know, what do you mean by bad debt? In the comment box, please tell me, what do you mean by bad debt? What is the meaning of bad debt? Please tell me, what is the meaning of bad debt? What do you mean by bad debt? In the comment box, I want the answer. What do you mean by bad debt? Gautam Gupta says, hi. Hi, Gautam. In short, I want to know, what do you mean by bad debt? In short, not recoverable from debtors. Perfect. Jyotish has given the right answer. And the first right answer, amount which is not recovered from the debtors. Irrecoverable. Vanshi is right. Vanshi is also right. Nandini is also right. Gautam Gupta. Gautam Gupta is also right. The amount due from debtors which we will not get. Yes, guys, you are absolutely right. Bad debt means the amount which we are not going to get back from our debtors. Debtors are there and our debtors are not ready to give this amount back to us. This is known as bad debts. So bad debt means the amount which we are not going to get back from our debtors. It is irrecoverable from our debtors. So guys, there are two things. Okay, thing number one is that we expect that this debtor will not repay to us. Okay, we feel that. So how can you feel that? What are the factors which you have seen that you can feel that? The feeling is because of the factor that the business of the other person is not going well. We know that our debtor's business is not going well. We know that our debtor's net worth has been eroded, which means his liabilities are much more than his assets. We know this fact for sure for our debtor. We have a feeling. We have a feeling that that particular debtor is not going to pay us the due amount. This is a feeling. He has not denied the payment as yet. Please note, he has not denied the payment as yet. He has not denied the payment, but we feel that since this debtor is going towards bankruptcy, since this debtor is having a liabilities much higher than the assets, since all the factors are against this particular debtor, we feel that this debtor is not going to pay us our money back. And that feeling can be converted into an expense which is known as provision for bad debt. What do you mean by word provision? Provision means expectation. Provision means expectation. Okay, estimate or expectation. So whenever we feel that this debtor might go bankrupt, this debtor might not be able to pay us our money back, then we are going to recognize this particular feeling of R in our books of accounts by way of a provision. But it's not necessary that whether our feeling is correct or incorrect. It's not necessary that our feeling will always be correct. It's not necessary. Our feeling might be incorrect also. Our feeling might be incorrect. So how will our feeling be incorrect? Our feeling might be incorrect that we feel that he is moving towards bankruptcy and insolvency, and we feel that he will not be able to pay us money, but he pays back money to us, right? So our feeling might be correct or incorrect in future, but as of now, as of today, I have debited my P&L account in financial accounting based on this feeling. I have booked a expenditure known as provision for bad debt. This is not the real bad debt. Bad debt has not incurred. It is just our feeling. It is just our emotions which is driving this particular expenditure. It is not an actual expenditure. It is not an actual expenditure. It is just our emotions which have triggered this expenditure. It is not an actual expenditure. But yes, it is debited to our P&L account as an expenditure. And the second limb of it is actual bad debt. This is not driven by feelings. This is not driven by what we think. This is the actual bad debt which has been incurred. This is the actual debtors which have gone bad. These are the actual debtors which have told us that we are not going to pay you the money. These are actual bad debts. These are actual bad debts. These are expected bad debts, estimated bad debts, or expected bad debts. These are actual bad debts, which means that these are bad debts which are actually which have been incurred, which have denied us to pay money, which have gone bankrupt and insolvent. This is known as actual bad debt, and this is an actual expenditure. So, as you're aware, guys, Income Tax Act doesn't permit expenditures which are based on feelings, emotions, and which are not actual. These are not actual expenditure. So Income Tax Act will not allow provision for bad debt. There are certain exceptions to it, which we are going to discuss subsequently, but the broad principle is provision for bad debt not allowed as a deduction. Actual bad debt allowed as a deduction. Provision for bad debt not allowed as a deduction. Actual bad debt allowed as a deduction. That is the primary principle. Now we discuss provision for bad debt in a little more detailed manner right now. Yes, sir. Okay. So, the usual principle, provision for bad debt is not allowed as a deduction. This is the usual principle, okay? But one exception to it is banks. Provision for bad debt is allowed as a deduction in case of banks. Yes, even if it's an estimate, even if it's just a feeling which bank has, and banks don't have this feeling size. RBI tells bank certain norms which if are not fulfilled, then you treat those debtors as bad debts. So there are specified norms which RBI has told banks, and on basis of those norms, provisions are created. It doesn't depend upon the feeling of the bank. It depends upon the norms which are stated by RBI to create these provisions. So in case of banks, both provisions as well as bad debts are allowed as a deduction. But in case of other assessees like companies, like HEF, like businessman, like any other proprietorship or partnership, etc., etc., provision for bad debt is not allowed. Provision for bad debt is not allowed. Actual bad debt is allowed. Provision for bad debt is not allowed in case of any other type of businessmen. But yes, in case of banks, actual bad debts are also allowed, and provision for bad debts are also allowed, but not to the extent of double deduction. What do you mean by double deduction? I'll give you an example. Bank has given loan to Mr. A. Mr. A was considered in one of the years for provision for bad debt. Okay, Mr. A was considered to be a person who bank thinks that, or RBI guidelines say that he will become bankrupt and he will not be able to pay you the money. Okay, so we allowed Mr. A's amount of loan which Mr. A has taken from the bank as a deduction. We allowed it in one of the years. In the subsequent years, third or fourth year, Mr. A actually gone bankrupt and his money got bad debt. Then we are not going to allow this particular expenditure again. Okay, why? Because we have already allowed expenditure with respect to the provision. So please remember, in case of banks, double deduction will not be permitted. If you have claimed provision for bad debt as a deduction, then you will not claim the actual bad debt as a deduction for the same amount for the same person. You need to take care of this fact. Double deduction is not permissible. This might lead to a double deduction situation, but we will make sure that we are not reducing the amount doubly. So next is, in case of banks, Indian bank, including cooperative banks, and we'll talk about separately about foreign banks, public financial institutions, state financial corporations, state industrial development investment corporation, NBFCs. Okay, we'll talk about Indian banks, which are pure banks. We'll talk about the other banks other than Indian banks. Okay, for Indian banks, the maximum permissible amount which is allowed for provision for bad debt is 8.5% of the gross total income, GTI. So the maximum permissible amount of bad debt, which is provision for bad debt, which is allowed for a bank, is 8.5% of GTI before allowing Chapter 6A deductions, and before provision for bad debt deduction. So GTI will be computed before allowing the Section 6A, Chapter 6A deductions, and before allowing the provision for bad debt deductions. Both these should not be reduced. the GTI should be before this amount, and 8.5% of the GTI is allowed as a deduction for provision for bad debt. If your deduction is higher than 8.5%, it will not be allowed as a deduction for provision also. Then in case of other banks, the limit is, okay, before we come on to other banks, 8.5% of the GTI plus 10% of aggregate advances made by the rural branch of these banks. Okay, so the rural branches of these banks, the original branches will have a limit of 8.5% of GTI. Then there is an additional deduction for the rural branches of these banks. 10% of the aggregate average advance made by the rural branches is allowed as a deduction for interest. Deduction for provision for bad debt will be allowed additionally for the rural branches of these banks. So if the branches are located in extreme villages or areas where urbanization is very less there, then guys, we will allow 10% additional deduction for provision for bad debts. Then we come on to the other banks. Other banks means foreign banks. In case of foreign banks, public financial institutions which are not banks, these are strictly not banks, these are financial institutions. So there's slight difference between NBFC, non-banking financial corporation, the state industrial investment corporation, these corporations and banks. What is the slight difference? Slight difference is that they are not allowed to carry on public dealing in deposits. They cannot take deposits. So NBFC cannot take deposits from people at large. So they cannot deal with the regular banking functions. They are given certain specific banking functions like loan giving, okay, like investment loan, like financial loans, or some specific areas of bank they can work for, but they cannot have full-fledged banking operations just like banks. So these entities will have a restriction of 5% of GTI to their provision limit. Provision limit is 5% of GTI, and 5% of GTI will be before Chapter 60 deduction and before provision for bad debt deduction. Both these should not be reduced while computing the GTI. That is the limit which is prescribed. Okay, sir. Now the question is, what will happen if the amount of bad debt is recovered subsequently? Guys, it may so happen that as of now, you have recognized some amount as a bad debt, right? But subsequently, the bad debt gets recovered. Subsequently, the bad debts get recovered. So bad debt recovery, section 41(4), bad debts get recovered subsequently at a subsequent point in time. Bad debts get recovered. This can be a probable option which is there, that at a later point in time, subsequently the bad debts get recovered, the bad debt amount get recovered. So this recovery will lead to an income for the businessman. But now please understand one thing very, very carefully, okay? The bad debt which was disallowed in the earlier years, its recovery will not be taxable. Let me repeat. The bad debt which was disallowed in the earlier year, its recovery will not be taxed. And the bad debt which was allowed in the earlier year, its recovery will be taxed. The formula is very simple. The bad debt which was disallowed in the earlier year for whatever reason, however, bad debts usually are allowed, right? Actual bad debt, when it is incurred, that is allowed as a deduction. But suppose I'm assuming that in the earlier years you did not allow that bad debt as a deduction. So now when recovery happens, then also you cannot offer it to tax as income. Government of India will not tax it again. But the bad debt which was allowed as a deduction in the earlier year, that if that amount gets recovered, then guys, that will be treated as income. That will be treated as income. So bad debt recovery taxable as Pgbp if recovery amount exceeds the disallowed amount. So the amount to the extent of disallowance will not be added to income. It will not be treated as income. But the amount which is over and above the disallowed amount, then that will be treated as income of the bad debts. So bad debt recovery is treated as income if it is not disallowed in the earlier year. So the amount which is not disallowed in the earlier year, that is allowed as a income. Okay, sir. Okay, let's take an example also. Please see this example. It's a very nice example which has been carved out. Okay. All right. So bad debt claimed in the earlier year was 8 lakh rupees. Bad debt claimed in the earlier year was 8 lakh rupees. Entire 8 lakh rupees was allowed as a deduction. Okay. Bad debt claimed was 8 lakh rupees. Entire 8 lakh rupees was allowed as a deduction in the earlier year. You have reduced your income by the amount of 8 lakh rupees in the earlier year. Entire amount is allowed as a deduction in the earlier year. So any recovery is taxable. Any amount which is recovered from this 8 lakh rupees is taxable as Pgbp. Any recovery is taxable as Pgbp. However, if out of this 8 lakhs, 6 lakh was allowed in the earlier year and 2 lakh was not allowed in the earlier year, out of this 8 lakh, 6 lakh was allowed in the earlier year, 2 lakh was not allowed in the earlier year. Then, guys, its recovery will be taxed only to the extent of the amount which is allowed. Its recovery will be taxed to the extent of amount which is allowed. So, if entire 8 lakh rupees is allowed, then only 6 lakh rupees will be taxed. Are you getting me or not? So, the amount which is recovered, that will be taxed only till the extent of 6 lakh rupees. Let's see what is the conclusion. So, suppose if 1 lakh rupees is recovered, if 1 lakh rupees is recovered, then we will assume that this 1 lakh rupees is from this 2 lakh rupees. This 1 lakh rupees is from this 2 lakh rupees, which was not allowed as a reduction in the earlier year. It will not be taxable in hands of the assessee in the current year. But if this 1 lakh rupees is increased to 2 lakh rupees, if 2 lakh 50,000 rupees was recovered, then guys, out of this 2 lakh 50,000 rupees, 2 lakh rupees will not be taxed because it was not allowed in the earlier year. And only 50,000 rupees is to be taxed, which is allowed in the earlier year. So amount which is allowed as a deduction in the earlier year will be taxed. Amount which is disallowed as an expenditure in the earlier year will not be taxed, because disallowance means you did not allow this expense as an expense. So if you're not allowed this particular expense as a deduction, then its recovery should also not be taxed, should not be treated as income. So if it's entire 1 lakh rupees, if 1 lakh rupees is recovered, we will assume that this 1 lakh rupees is from the 2 lakh rupees which has not been allowed, and we will not tax this 1 lakh rupees. And if this amount is 2 lakh 50,000 rupees, then we will assume that 2 lakh rupees is from 2 lakh rupees and balance 50,000 is from 6 lakh rupees. So only 50,000 will be taxable as Pgbp. Will be taxable as Pgbp. Guys, a very, very important chapter session, this slide, a very, very important slide. Please understand this numerical also very, very well. And yes, I'm going to share this entire slide in the WhatsApp group. So you will get this entire slide in the WhatsApp group as well. Okay, sir. Got it. So yes, this was the most important deduction of your syllabus, guys. Most important deduction, which is the deduction on bad debts. Bad debts, how will they be recovered? How will the bad debts be allowed or disallowed? That is the discussion which we have done just now. Okay, guys. So guys, the next deduction is deduction on TDS. And let us start this deduction in our next session, because this deduction is a heavy discussion. This discussion is a prolonged discussion. I need a lot of time, a lot of your patience, and I need your mind to be fresh when we are discussing this particular topic. So this topic, default in TDS, we'll discuss in our next session, which should be scheduled in the next week. Okay. So yes, guys, this Sunday, the date is 17th of April. No test is there for Pgbp, because we have not been able to cover enough syllabus during this week, because we did not take 2 classes. So the syllabus is not appropriately covered. So this Sunday, there will be no test. 17th of April, there will be no test. 24th of April, there will be test of the remainder sections after section 32 AD. So next Sunday, 24th of April, there will be test. 17th of April, there will be no test. And in the next week, we are going to complete this particular chapter of Pgbp completely, so that we are able to give the test properly. So yes, guys, we'll meet in our subsequent sessions. And yes, before we sign off, please hit a like button. If you really liked this particular session, please hit a like button and do share these videos with your friends. And yes, hit the like button, hit the subscribe button as well, so that I'm motivated to continue these short lectures perennially till at least June. Now your examination is also around the corner, guys. June 27th is the date. So please be on your toes. Please be very, very active for your examination. Your examination is round the corner, because now if your examination preparations are not going well, then you are landing yourself into trouble, because April is almost reaching its end. After that, you will find very, very difficult to catch up with your studies if you don't start today. Start today. Give yourself the best shot. I mean, give yourself the strength that you want to appear for June 2022 examination. And yes, we'll be meeting in our subsequent sessions. Till that time, all the very best and happy studying. Bye bye. Bye, guys. Welcome, welcome, everyone.